In case you hadn't noticed, there's a great energy at work here in the South Sound. It's called SAN, the Senior Action Network, and the name says it all. The collective knowledge, experience, and commitment of dozens of organizations and service providers represents an invaluable resource for older adults and their families. Truly, SAN is there when you need to reach out. Find out more, visit their website, or call us at 586-6181 and get on board as we celebrate live.
Well, I am very excited to have two wonderful guys here with me, both of them members of the Senior Action Network. And they've done presentations to our senior community of service providers. And I've asked them to come to the show to educate me, as well as everyone in our audience, about reverse mortgages. So Terry Snyder and Dave Willis, welcome.
Thank you.
It's nice
glad
to
be
have
here.
you.
Absolutely glad to be here.
Okay, well, so I guess we're going to jump right in. And David, can you tell me why reverse mortgages were developed in the first place?
Well, there was a need about 20 years ago. There were people that were healthy enough and wanted to live in their home, but for some reason they weren't able to afford it anymore, either the death of a spouse or loss of retirement or a hardship. So the U.S. government with FHA created a program where people could trade their mortgage from one that had payments to one that didn't have payments, and also access a portion of their equity. So they could use their equity in the home to live in, but it's for the right person. You have to want to live in your home. You have to be healthy enough to take care of the duties there. But a reverse mortgage is simply access to some of your equity.
Okay, well, thank you. So then, Terry, are there some people that are eligible and some people that aren't? And what kind of homes are actually eligible for it?
Well, that's usually where we start when we start getting information for folks is, first of all, you have to be at least 62 years of age, and that's either of the couple, if it's a couple, so the youngest can't be younger than 62, so that's important. There's also some issues where somebody might have created a trust, and there are circumstances where they could own it personally or a trust, but that gets to be a little more technical. So anyway, 62 or older, they have to occupy it. It has to be their residence, their permanent residence. That's critical. So if they, for whatever reason, move out of their house, then that triggers the need to repay the loan. The types of homes that are eligible are somewhat broad, fairly typical of what you'd find in the normal lending business. Is it can be a stick-built or a typical single-family home. It could also be a duplex. It can be an income-producing property as long as the senior occupies one of the units. So that comes up occasionally. It's not real common, but if someone's trying to supplement their retirement income with rental income, that might be an opportunity. It could be a condominium. It has to be an FHA-approved condominium. As David said, this is an FHA program, so all of the homes that people would use on a reverse mortgage need to be the condominiums have to be FHA approved. And it could be a manufactured home, but it has to be a manufactured home on land. So it has to be real estate. So it can't be, unfortunately, in a park. That comes up from time to time. People, and seniors, particularly with modest incomes, live in mobile home parks, nice ones, but unless it's part of the real estate, it really doesn't qualify. So to be eligible, you just got to be 62. You got to own a house. Can be one of the ones I mentioned. And you really need to have a significant equity because there's some limitations on how much one can borrow. So if somebody doesn't have hardly any equity, it's probably not going to be a good fit. But if they have a good equity, it might be an opportunity for them. Yep. Okay.
Well, so if a senior does this, Dave, do they still own their own home? And how is the loan repaid in the long run?
That's the biggest question we get. And absolutely, they own their home. They do have a loan on their property, and it's a mortgage, and the terms are different because it's a unique loan. One of the issues are it has to be a home they live in. It has to be their primary residence. That's one of the qualifications there. But once they live in it, they can do as they want. You know, they don't have to, if they decide they wanted to sell the home, they wouldn't need to call the bank on a regular loan and check with it. They can live there as long as they want. The main thing is they don't have to make payments. They're always allowed to make payments, but they're never required to make any mortgage payments while they're in the home. They do have to keep up with the property taxes, and they do have to take care of the homeowner's insurance because it has to be insured and the taxes has to be paid like a traditional loan. But it's really a unique way for people to access some of their equity, live in their home. And the contract does have an age limit that you can own, and it was placed at 150 years old. So if somebody lives to 150, at that point, they would have to repay the loan. But yeah, they absolutely own the home. And how is the loan repaid? This is an FHA guaranteed program where it's a non-recourse loan, meaning that they will sign papers that they are never personally responsible for repaying the loan. Only the home is. So that it's their home, and if they passed on or decide to move out of state, they wanted to sell the home, they could do that, but then they would have to repay the loan. They would pick the realtor, they would decide what price they're going to sell it for, and they sell it. And just like a traditional loan, the bank would have a mortgage and would get paid off. So the bank gets what it lent you, plus the interest that's acquired, and the family keeps the rest. So it's a great way to stay in your home if that's what you want to do.
Yeah, okay. So do either or both of you have a little story of maybe a scenario of where that's helped somebody?
Well, you know, the reason that people take out a reverse mortgage is to solve a problem that they have typically, and the issues that people are trying to deal with, the reasons that they take out a reverse mortgage are about as broad as you could possibly imagine. But I can think of one probably in the last 6 months where I met a couple in their 70s. And by the way, that's typically 70 to 80. That kind of seems to be the age, maybe even into the mid-80s, that people consider reverse mortgage. As they get older, you know, they're probably not so able to stay in their home. So 70 to 80, that's probably kind of the sweet spot, I would say. But I can think of a couple who I met with, and as is typical with seniors, you maybe meet with them several times. So they gather information, they go home and digest it, maybe even you make recommendations for them. This couple had a home equity loan with a local lender, and they were trying to increase that home equity loan. And after a month or so, the lender decided that they couldn't help them because under a reverse mortgage, there's no qualifying. So you don't have to credit qualify, you don't have to income qualify. If you're 62 or older and you have equity in your home, you're pretty much qualified. So after a month, these folks found that they weren't going to be able to get a loan through the lender because they couldn't qualify. So we pursued it, and as it turned out, their reverse mortgage was put together. It usually takes 4, 6, 8 weeks to put one of those loans together. And they took out the mortgage because the wife had become ill. Actually, she had a surgery, it failed. She was confined to a wheelchair. She needed a ramp and a van, which can be very expensive, and that wasn't covered by medical insurance. And they'd also run up some medical bills that weren't covered by insurance, so they had credit card debt to pay off. They needed a van with a ramp, which was, I think, $35,000. And they also need to make some home repair. So, you know, sometimes it's one reason that somebody might get a reverse mortgage. In this case, there were, you know, multiple uses for the money. And so it was one of those situations where had there not been a reverse mortgage available, I'm not really sure what they would have done because they weren't able to qualify for the more traditional financing. So that's a fairly recent situation that I can, that worked for them.
Okay, how about you, Dave?
Well, there was a couple that I helped a few weeks ago, and a couple had been married for more than 40 years. They lived in the same house for more than 40 years. And the way life changes, they were also responsible for taking care of their granddaughter. Their child had passed on. So they were, and the husband was in very ill health. And they realized that when he passes away that they were going to lose half of their Social Security income. And he also had a pension that was providing them money. So they had about $3,000 a month to live on. But the husband was very sick, and he did pass away very quickly. And their income went down to $1,100 a month. Their mortgage payment was $1,200 a month. So what they did is they traded a mortgage that had a payment for a reverse mortgage. It was the similar amount of money, but they didn't have a payment. So she was able to live on the amount of money she had. We were also able to give her a line of credit of about $50,000 that she could access whenever she had needs, if there was an emergency that came up. So it was a situation where it worked real well for them. There was a other couple about the same time, about the same age as Terry's couple, that had what's called a hard money loan. They weren't able to get a loan from a bank. They had run behind on some bills, and they were getting foreclosed out of their house. And they owed about half of what the total value was. But we were able to come in, we were able to stop the foreclosure. We were able to go in and help them. They didn't even have a heat source in the house. They had no, to qualify for FHA, they had to have a heat source. There were broken windows. The windows got fixed. And we were able to get the home repaired, get the hard money loan paid off, and they were able to spend the rest of their life there in the home without having to make payments. And it really, they were just so satisfied. So you can use it for hardship, but there's lots of people that just find that they can enhance their life by dismissing their mortgage and accessing some of the cash that's available to do some of the things they want to do while they're young enough and healthy enough to get out there and do them.
Okay, well, it sounds like it could really work for the right situation. So if somebody had questions, say they listened to this and thought, oh, that might be an idea, how could they get hold of one of you to just ask questions?
Well, I'm available to come to their home or into my office, which is locally here in Olympia. My phone number is 360-791-8778. My name is David Willis, and I'm with Guild Mortgage, which is local here in Olympia.
And how about you, Terry? What's your number?
Yeah, I agree. David and I think are about giving information to folks. So whether they want to come into the office or they want to, have me come to their home, whatever is most convenient. I work for Ward Lending Group, which is here in Olympia, and I can be reached on cell phone, which is best, 360-790-7724, or they can go to our website, wardlendinglg.com, and find out more about us and reverse mortgages.
Okay. Well, thank you, gentlemen, and I want to say a big thank you to the Senior Action Network who helped pull this all together. It's a good educational piece that people should know more about. Thank you very much.
Thank you.
Thank you very much.
You've been watching South Sound Seniors, a look at the people, places, and events that impact our growing senior community here in the South Sound region. Our program is presented as a community service to inform and involve you and yours in the lives of older adults. Our program came to you through the facilities of Thurston Community Television in Olympia, Washington. We invite your comments.